Hi, Matt. How are you?
I'm doing well, Kathy. How are you?
I'm doing well. Thank you so much for being here with us. We're just going to introduce the show, and then I'd like to introduce you and what we're going to talk about today.
Great.
Welcome, everyone, to Cryto DeFined for the week of June 2nd, 2022. My name is Kathy Chu, and I'm your host for this weekly interview series where we look at the innovators, the disruptors, and sometimes the skeptics of the nearly $3 trillion crypto industry. Cryto DeFined is put out by a new journalism organization called TruthDAO. We're the first global Web3 news organization focusing on nonpartisan, unbiased journalism within a DAO. Visit truthdao.xyz, join our Discord, and help us in joining to discover a new way to news. Today's guest is Matt Hougan, who is considered an expert in the crypto world, in ETFs, and in financial technology. Matt is the Chief Investment Officer for Bitwise Asset Management, the world's largest provider of cryptocurrency index funds, with $1.2 billion in assets under management at last check. He was previously CEO of ETF.com and Inside ETFs, where he helped build the world's first ETF data and analytics system, the leading ETF media site, and the world's largest ETF conference. A few more qualifications for Matt. He sits on the board for Equibot. Matt, we could write a book here.
Yeah.
He sits on the board for Equibot, the creator of the first AI-driven ETFs, and is a strategic advisor to multiple crypto and financial advisor-related startups, including Blockworks, Stratify, Advisor Circle, and Exchange. Thank you, Matt, so much for being with us today. I really appreciate it, and I appreciate your time and insight to our audience today.
Well, I'm so excited to be here, excited for what you're doing at TruthDAO, and really looking forward to our conversation, Kathy.
Fantastic. Well, a lot has happened. I have a million questions for you, but we have to start somewhere. So, Matt, I was reviewing some of your past interviews, and you said something very interesting that I'd like to start the interview off with. Matt, in a recent interview, you said you thought Ethereum would be the crypto asset of the year for 2022. Mm-hmm. Do you still believe that? And if so, why?
Yeah, I absolutely do believe that. I believe it for two core reasons. One, I think the biggest meta theme in crypto right now is the entry of institutional investors into the space. And while the bear market has slowed that down, it hasn't stopped it at all. The institutions that I talk to find Ethereum particularly attractive because they see it as sort of a productive crypto asset. Many of them first encountered crypto through the eyes of Bitcoin, which they see as something like digital gold or a digital monetary asset. But the idea of Ethereum is this new platform for DeFi, this new underlying internet backbone for a new financial world, appeals to them in a different way. It seems more akin to a software startup. It's easier for them to get their heads around. So I think it will be the asset of choice for institutions. And then the second reason, of course, is the upcoming merge. I think the market has not realized what a big deal the merge will be. I think it's almost too much information to take at once. but it's 1.5 Bitcoin halvings. It's a massive ESG improvement. It introduced the ability to earn yield, and probably a pretty high yield on a long-term investment in Ethereum. And I think that combination of three things will just make it incredibly attractive for the institutional community. Once the macro market normalizes, I think Ethereum will rebound first and probably highest amongst the crypto assets, because it does have this institutional interest that's building in the market.
Now, the merge was supposed to happen sometime in June, correct? Is that still the latest timeline as far as you know? And what happens if it's delayed?
Yeah,
Will Ethereum still be the crypto asset of choice?
This is the great question. This is the risk in my thesis, or to me, the biggest risk in my thesis. It's been delayed already. People are now looking at August. I would suspect that August will probably slip into the fall. Software upgrades, particularly complex software upgrades, often take longer than people expect, and developers are good at being overly ambitious on timelines and then having that delay into the future, particularly in decentralized settings. So I think there's risk that the merge slips into the fall. I don't think, from a market perspective, in terms of Ethereum being the institutional crypto asset of the year, I don't think it matters until we start to slip beyond the fall, beyond November, and start talking to 2023. I think if we get out of this year, if developers start talking to us about this being delayed by a full year, people will start to introduce the idea of risk that this may never happen. Right? There have been some issues with the Ethereum blockchain. There have been some reorgs. There's been some challenges in this technological progress. As long as it's contained and it still happens this year, my story is intact. If we start hearing people pushing it off into 2023, I think there's real risk, and there'll be risk on the downside in Ethereum's price.
Okay, great. Well, let's switch track and talk about Bitcoin for a second. Matt, last time you and I talked, we talked a lot about Bitcoin ETFs. And I think generally a lot of people are invested in ETFs in their retirement, in their everyday life, right? So I think the idea of a Bitcoin ETF is something that people can understand. Here's my question for you though. Why do people need a Bitcoin ETF? Bitcoin ETFs have not been approved, the spot Bitcoin ETFs at least. Why do we need a Bitcoin ETF if investors can just invest in Bitcoin? What is the advantage, and why does Bitwise as investments want a Bitcoin ETF approved?
Yeah, great question. The short-term advantage, if you're a retail investor, is there isn't a major one. If you're an individual sitting at home managing your portfolio, and you have your equities in your Schwab account on one screen, and you have your crypto assets in your Coinbase or some other account on another screen, you're perfectly fine. The real value of a Bitcoin ETF is for the financial advisor community and for the professional investor community. For what it's worth, those two communities control about 90% of the assets in America. So they're big investors. And for them, crypto doesn't yet fit easily into their workflow. If you're a financial advisor managing money for 100 families, you probably can't use Coinbase or another retail-oriented account to manage their crypto assets. It doesn't fit into your portfolio software. It isn't compliance approved. It doesn't fit into your billing and other systems. I know that sounds really boring, that the primary use of a Bitcoin ETF is that it flows into the systems of large, established professional investors. But it's a major breakthrough. And I'll give you an analogy that I think drives it home. People have been investing in gold for 5,000 years. And you could always invest in gold by ordering gold coins, by going to 42nd Street and trading with a gold dealer. But until the advent of a gold ETF, most investors did not have gold exposure in their portfolios. Why? Because it didn't fit into their reporting systems. It wasn't push button easy. Once a gold ETF was approved in 2014, gold became a mainstream asset. That ETF went on to hold something like $80 billion of gold at its peak. And so the lesson is, once you put it in an ETF, it becomes easy. That allows it to go mainstream. And that's why it's really important. It's important for the next $1 trillion that's going to flow into Bitcoin. I will say one last thing, Kathy. Even for retail investors who won't own the ETF, they should want it to happen. And the reason is that the history of ETFs is a history of them driving down the cost of investing. And so even if you won't own the Bitcoin ETF, Bitcoin will pressure platforms like Coinbase or other retail platforms to lower the cost of investing in Bitcoin because they'll have to compete with this new institutional structure. So whether or not you plan to own it, you should want it to happen because it will bring the cost down and it will bring a huge class of new investors into the market. I continue to think it's one of the potential catalysts for the next bull market in crypto. Not the only one, but it's one of them.
So besides the systems being easier, though, with a Bitcoin ETF, Matt, wouldn't some retail investors look at this and say, okay, all these firms offer Bitcoin ETFs now, so I can just invest in this ETF rather than figuring out when to get into the Bitcoin market. So wouldn't it directly impact their thinking about this asset class?
I think that's absolutely right as well. It makes it easier to invest. It improves regulatory clarity, which, we do surveys of investors all the time, Kathy. The number one impediment to them investing in crypto, if they're not already in, is a lack of regulatory clarity. So having a Bitcoin ETF would improve that dramatically. It would just normalize the asset. Look, crypto has been on a 13-year journey from being a very obscure thing, only owned by a few people, to being a central traditional asset that's going to be in most portfolios. The Bitcoin ETF will be a big milestone. So I agree with what you're saying. It'll be helpful for all investors. It'll increase confidence. It'll increase regulatory clarity. And I can't wait for that day to come.
So let's talk about how much potential assets this could bring in. When you filed your submission with the SEC, Matt, you noted in there that exchange-traded products in the first year of operation received between a median of 28 million to 5.35 billion in funds in the first year of operation alone. So that brings me to, I was thinking about that in regards to the Bitcoin ETF and thinking, how much do you expect a Bitcoin ETF to bring into the industry within the first year? Are those parameters 28 million to 5.35 billion? Is that a fair estimate of what could be added to the Bitcoin industry if this Bitcoin ETF is approved?
It's such a great question. The answer, of course, is that no one knows exactly, but I love that you've done your homework and pulled up all our old research. What that represents
266 pages of your submission.
Some light, bedtime reading or by the fire. What we did there was we looked at every ETF that is launched in history and saw, what assets have they brought in. People throw out absurd numbers about how much assets a new Bitcoin ETF could bring in. That it'll bring in $30 billion or $40 billion in year one. There's just no record in the literature of that happening. I don't think people have quite the right mental model. Even once an ETF launches, it needs to be approved on different platforms. Various broker-dealers have to turn it on. So it's not an all or nothing thing. I do think it's highly likely that an ETF will bring in a few $billion in its first year. But I actually think the impact will be felt over 3 or 4 years. Again, I go back to that gold ETF. The gold ETF was the fastest growing ETF of all time. It pulled in $1 billion in, I think, its first 3 days on the market. And people talk about that as a big deal. But the reality is, after that initial push, it leveled off for a while. By the end of year one, it had $3 billion in assets. It didn't really hit its stride until year 3, 4, or 5. And that's when those assets soared up into the $80 billion range. I do think a Bitcoin ETF could eventually be a tremendously successful ETF. I think it could be one of the most successful launches over a 10-year period in the history of the ETF landscape. But I think it'll take years to build. So, could it bring in a few $1 billion in its first year? I think that's what we modeled to the SEC as sort of an aggressive scenario. But I really think the impact will be felt in years 3, 4, 5, once this is completely normalized, once more investors understand the value of adding crypto to a diversified portfolio. And I think that'll take a little bit of time.
Okay, fair enough. Matt, before we get into where the Bitcoin ETF proposal stands today, Let's look back to look forward. I think it's important for people who haven't been following the nuances of this industry to understand a little bit about why Bitcoin ETFs have not been approved by the SEC. As you and I talked about, people know the concept of a Bitcoin ETF, but they don't know why has the SEC not approved this, correct?
Yeah.
So let's look back. 3 years ago, research by Bitwise Investments really rocked the industry. And when I say rocked the industry, it means like just floored some of the exchanges out there that I've talked to about your research. So the research by Bitwise Investments really rocked the industry when it found that 95% of Bitcoin trades were fake. I mean, that number in and of itself, you know, I'm sure when exchanges saw that and people in the crypto industry saw that, they thought they must be making an error. It must be 9.5%, but it's 95% of Bitcoin trades were fake. Okay, so I know that figure may have changed since then, and we'll talk about that in a second. But talk to me about why this finding that 95% of Bitcoin trades were fake in 2019, why that was important back then. Why did that matter to your submission, Matt?
Yeah, great question. Yeah, that number really made me very popular in the crypto industry. A lot of people didn't love seeing that, but it was the truth of what the market was going through at that point. There was a lot of fraudulent volume. The answer to your question on why it's relevant to a Bitcoin ETF goes to the heart of what's preventing us from having a Bitcoin ETF today, which is the SEC has a rule for commodity-based ETFs or other novel ETFs that there must be a regulated market of significant size. And those are the words, those are very specific words. Regulated market of significant size, trading alongside a commodity that you can surveil. Think of it this way. The gold market is not a regulated market. If you go to 42nd Street and buy an ounce of gold, there's no one from the SEC looking over your shoulder to make sure it's a valid trade and it's done according to best practices. But the SEC has allowed a gold ETF because there is a gold futures market that trades on COMEX that's really, really big. And so their perspective has been historically, as long as you can surveil the gold futures market, you can have proxy surveillance on the gold spot market, and therefore we can have an ETF. So in crypto land, the way that translates is there is a regulated Bitcoin futures contract. It trades on the CME. It trades billions of dollars a day. The question is the CME, can we demonstrate that CME is a, quote, regulated market of significant size? So our first attempt at doing that was to reveal the lie that everyone in crypto knew, but no one talked about, which is that most of the reported trading volume was fake. And the reason that was important is if you think about that phrase, significant size, people were looking at the CME Bitcoin futures market doing $1 billion in daily trading volume and comparing it to these outrageous $50-60 billion in reported trading volume they were seeing in Bitcoin and saying the CME market is really tiny. What we were showing was, no, that number of spot trades is grossly exaggerated. It's actually a fraction of the size. And if you compare the CME Bitcoin market to the real Bitcoin spot market, it looks pretty big. That was the basis of our argument to the SEC. Ultimately, while they largely accepted our report on fake volume, they determined that this relationship we showed was not significant enough to pass their standards. But I think we did move the ball forward significantly in terms of getting us towards approval of a Bitcoin ETF through that effort.
Right. So the SEC, there are two of their main concerns, not all of their concerns, but two of their main concerns in deciding whether or not to approve a Bitcoin ETF is surveillance and market manipulation, correct?
Mm-hmm. That's right.
And they want to make sure basically that investors are protected. So I guess my question to you now is, has market manipulation in the Bitcoin market gotten better? Do you feel that the market has matured to a size where market manipulation is not such an issue? And I know you haven't released another report on it, But what are you seeing in terms of market manipulation, Matt? Is it anywhere close to the 95% figure that you found 3 years ago? And if not, what is it? What's a good range nowadays?
Great question. Yeah, the Bitcoin market has matured enormously in multiple dimensions. It's matured from a custody perspective, it's matured from a regulatory perspective, it's matured from the mix of investors that are operating in it, and it's matured in terms of the maturity or the institutional nature of these crypto trading venues that are reporting this trading data. So when we look out over the crypto market today, what we see mostly are legitimate exchanges engaged in a legitimate business. We see the Coinbases and the FTX USs and Binance and Gemini and Kraken leading the leaderboards in terms of reported volume. Most of these are well-regulated venues. And so we think the market has trained dramatically. I don't have a number. I don't have an updated number on the presence of fake volume in the crypto markets today, but particularly for Bitcoin specifically, I would say it's very small, and the market has matured in an enormous way. At the same time, the CME Bitcoin futures market has become really, really significant. And I know we'll get to this, but our research suggests it's the leading source of price discovery in the crypto markets at this point. In other words, the institutional investors are the tail wagging the Bitcoin dog. They're now the ones dictating prices in the market. And so we see the Bitcoin market as mature, as institutional, as efficient, as well developed as most other commodity markets that we look at. And I think the data backs us up.
Okay, so no figures for how much manipulation, including wash trading, is still occurring in the market. But you said it's very small. I mean, very small meaning, like, do you think it's less than 50%, less than 25, less than 10, just based on what you see? I know you haven't done the study on it, but what do you see based on extensive research?
Something like those numbers. I think it's really small. I mean, a simple way to think about it, Kathy, that I think will appeal to people out there who are familiar with crypto. If you go to CoinMarketCap or CoinGecko right now, and you look at the list of the largest exchanges, they are all names that we know and are familiar with. They're names that have branded stadiums in the NBA. They're names with logos on the uniforms of umpires. They're familiar names that are advertising in the Super Bowl. These are real companies. Again, they're companies from Crypto.com to Coinbase to Kraken to Gemini to Binance to FTX. This is what dominates the leaderboard. In 2017, that wasn't the case. I mean, I was the CIO at Bitwise, one of the largest crypto asset managers in the world. And I would see these trading venues that I had never heard of, that had no employees on LinkedIn, that had no media mentions, that had raised no venture capital. They were companies like CoinBene. I think CoinBene was the number one exchange listed on CoinMarketCap in 2017 or 2018. It just didn't pass the sniff test. It's sort of hard in today's age to imagine a scenario where people went to the leading data aggregators and saw a list of the top exchanges and literally knew no people who had ever placed a trade on any of these venues. But that was the status of the market at that time. It was just transparently fraudulent. And that is not true today. That's why, even though I haven't done the study, I feel confident that the majority of volume is real. Because when I go on those leaderboards now, I recognize all the names. There's nothing that's unfamiliar to me. There are no companies where I don't know at least one or two people who are working there. These are real entities engaged in real trades with real customers. So I do think the market has cleaned up really dramatically.
Okay, fantastic. Thanks for that perspective. That's very helpful. Imagining, just that picture and giving people a way to kind of take a look and see what's real and what's not. Let me take a pause here and tell the audience that if you hear anything that Matt says that's interesting, audience members, if you have the Fireside app, you can click on the bottom right on your React button. You're going to choose an emoji, and then you're going to type in a question for Matt, and the producers will be able to see it. Audience in the live stream, you will not be able to ask questions, but you can definitely listen and submit questions later. Maybe Matt will be nice enough to answer a few questions later.
For sure.
Okay, so we talked about how if a Bitcoin ETF is approved, how it could make Bitcoin more mainstream for a lot of people. So let's fast forward to today. We talked about your application in the past. Last year, Bitwise resubmitted a Bitcoin ETF application to the SEC, a proposal. And I know that you've said that you think the market is ready for an ETF of this type. Maybe even regulators are ready. So what has changed that has made you think that?
Great. Yeah, two things have changed. The first is that we've seen some real breakthroughs and real progress at the SEC in terms of greenlighting Bitcoin and other crypto ETFs. A lot of people see the SEC, at least in the crypto industry, see the SEC as just sitting on its hands and saying no. But if you back up and look at what happened, that's not what they've done. They allowed a Bitcoin futures ETF as a 1933 Act fund. They allowed a Bitcoin futures ETF as a 1940 Act fund. They allowed some limited interval funds that hold Bitcoin directly to launch. So they've been greenlighting funds that sort of connect in a line that would end with the approval of a spot Bitcoin ETF. We haven't gotten to the end of that line, but there has been material progress. 2 years ago, there were no Bitcoin futures ETFs, and no one had a timeline for when we would get them. And now there are, and they've been trading and they've been working very well. So that fact pattern leads me to think we're closer today to approval of a spot Bitcoin ETF than we have been in the past. The other piece, which was informed in our research, is that the data supporting approval of a Bitcoin ETF has improved dramatically. Again, that key question is, can you demonstrate that there's a regulated market of significant size that you can surveil? And what we showed in our academic research was that the CME Bitcoin futures market has really come into its own as the leading source of price discovery in the Bitcoin market. In other words, it's the market that reacts first, and other markets tend to follow its lead. I think we did a good job putting academic research on paper that tries to answer the questions that the SEC has had. That doesn't mean that we've satisfied all their concerns, of course. They ask good questions, but we have pushed the ball forward, similar to what we did with the 95% fake volume research. We've tried to do that again in another vein. So when I look at the SEC's progress on approving Bitcoin products writ large, and I look at what the academic research is increasingly showing is true about the institutional nature of the Bitcoin market, those make me more optimistic than I have been in the past. Although, again, I want to emphasize, I don't know if the SEC will approve a Bitcoin ETF in July when our application hits its final review date, or indeed this year, or ever. I don't sit in their shoes. But I do think we're making progress toward that goal, and I do think we'll eventually get there.
Okay, and Matt, this gets into the nitty gritty a little bit, but I think it's important. Why is it important to the SEC that the futures market leads the spot market? Because that's something that has been talked about again and again. Why is that important for people who are not following the intricacies of this debate?
It's such a great question because it's so confusing, because we're talking about a spot Bitcoin ETF. Why do we care about the Bitcoin futures market? And the answer is that the SEC's rules effectively require you to have a regulated market that you can surveil. And the spot Bitcoin markets, Coinbase, Kraken, Gemini, etc., they're not regulated as national securities exchanges. So they don't meet the formal definition of regulated under this SEC interpretation. They, of course, have regulations. They are a regulated entity, but they aren't regulated with a capital R, if you want to think of it that way. The CME is regulated with a capital R. It's a national futures exchange, and it falls under full regulation. So it qualifies. And therefore, if you can demonstrate that it's the leading source of price discovery, you should be able to, or at least be closer to, satisfying this SEC's concern. So again, it's unusual that you have to talk about futures if you want a spot ETF, but that's the way the rules are written, and that's the way other ETFs have come to market, and that's what we've tried to show we've satisfied in our research into the space.
Okay. Well, that's very helpful. Thank you for explaining the linkage between that. So something happened this morning that I thought I need to ask Matt about this. You saw that the CFTC filed a lawsuit against Gemini, right, Matt? Gemini Crypto Exchange, saying that Gemini's employees misled the agency's staff about how easy it is to manipulate the price of a Bitcoin futures contract. So, just breaking news this morning, and the details are still coming out. But as this was coming out, I was thinking, how does that affect the prospects of a Bitcoin ETF, if at all? I mean, here we are talking about the allegations deal with Bitcoin futures, correct? But it is still talking about, the misleading of a regulator about how easy it is to manipulate Bitcoin. So
Yeah.
how do you think about that? How should we think about that?
Yeah, you should think of it as a setback toward a Bitcoin ETF. I wish I had better news, and I haven't reviewed all the details, but I did see the headline and read a news story about it. But all of those things decrease the SEC's confidence. It's important to remember that regulators aren't exactly paid to say yes, right? They're paid to say no until they feel certain that it's safe. And so these sorts of news stories do harm confidence and probably raise the barrier between us and approval of a spot Bitcoin ETF. Again, I wish I had a more optimistic interpretation of this news, but I think it's true. All of those little narrative cracks in the credibility of crypto as a institutional asset class make it less likely that the SEC will stick its neck out and say we're ready to have a Bitcoin ETF, even though it would benefit investors, and even though ETFs have been functioning well in multiple markets around the world, including Canada, Germany, Switzerland, Brazil, Australia, and others. It does raise the perceived risk. It raises new questions in their mind, and I'm sure it's something we'll have to talk to them or that they may ask questions about if and before they approve an ETF.
Okay, and one thing I was thinking about this when this news came out, Matt, is does anyone really know, despite all these studies about market manipulation, can anyone really know how much manipulation goes on? And isn't that part of the issue here? Because even if academics have done research about this, and you have done extensive research in the past about manipulation, but everyone says that manipulation has gotten more sophisticated and it's harder to catch. So, can anyone really know how much manipulation there is in the Bitcoin market, even though, everyone agrees generally that manipulation has gone down? Can you really know that it's minimal, or is that impossible to know?
It's a great question. It's basically impossible to know, and you can't prove that it will never happen and will never exist. Importantly, the SEC's standard is not that no manipulation exists, because of course manipulation exists in all markets. We've seen manipulation occur in the natural gas market. We've seen manipulation occur in the oil market. We've seen manipulation occur in the gold and silver markets. We see manipulation occur in the equity markets. The SEC's standard is actually, can you surveil it? Can you identify it and then pursue the bad actors? So it's not quite the case that we have to prove that the Bitcoin market is never manipulated, because that's an impossible standard, and it's not the standard for other assets. It's rather, do we have surveillance mechanisms in place that allow us to handle that manipulation and contain its impact? Of course, the SEC and investors want to know as well, is it generally a fair market, right? You don't want wild manipulation or make it a market where it's so easy to manipulate you can't trust prices. So you have to be confident it's a reasonable market. But then the standard really is that surveillance standard. Can you surveil the market in a comprehensive way? And that's really the question that is apropos vis-a-vis an ETF.
Okay, fair enough. A few more quick questions and for you, and then we'll see if we have audience questions. Matt, when you and I have talked about this, when we did when TruthDAO did an in-depth story about NFTs just a few weeks ago, one of our findings was that some of the wash trading had migrated from the Bitcoin industry to NFTs and altcoins, and basically less mature markets. And the story found that basically NFTs were seeing anywhere from 30%, 20% to 35% or so wash trading. And this is according to not us, but according to academics, according to firms that track this data and try to scrub it out of the exchanges and are basically selling their data to exchanges. They're monitoring the exchanges and saying, okay, you have, 50% of your NFTs are wash traded, right? So this is according to their data. So I wanted to just ask you, is that surprising to you that, some of this wash trading and market manipulation is migrating to NFTs and to less mature markets?
First of all, congrats on doing the research and highlighting it. I think it's really important for those of us who are long-term investors in crypto that we get the markets to clean up as fast as we can. And so highlighting the flaws in those markets is the fastest way to do it. That's one of the reasons we wrote the fake volume research originally and published it because we thought it would be salutary for the ecosystem. And I think that's true here with the work you've done highlighting the issue of fake trading volume and wash trading in the NFT market. So kudos to you. Does it surprise me? Absolutely not. These sorts of activities are synonymous with immature markets, and particularly markets where regulatory standards are evolving and the quality and established nature of institutional participants is still emerging. So it doesn't surprise me that as Bitcoin, Ethereum, and other large assets have matured and the markets around those have matured and become more regulated, that fraudulent activity has moved downstream. And certainly with the huge run-up in prices we saw in NFTs last year, that would attract a lot of excess activity. So I'm not surprised that it's happened. I don't think it means that NFTs aren't a huge technological breakthrough. I don't think it means that NFTs and even PFP NFTs are not going to be a material market in the future. It just means that we're extremely early and investors have to understand that and beware. And we have to all work towards having cleaner, better markets. So that's my view of what's happening there.
Okay, fair enough. Audience members, again, now's the time to ask Matt. We have 2 more questions for him. If you want to ask him a question, now's the time. He's very busy and you have him right here in front of you. You're going to hit the react button at the bottom right of your screen, and then you will type in your question and pick an emoji, and we can run it by Matt. Okay, so Matt, in your latest market commentary, you talked about the sea change in how crypto is viewed. You wrote that, and I quote, historically, one of the biggest risks to crypto was that regulators would strangle it. But crypto has gotten big enough and is driving enough economic growth that the pendulum has swung firmly in the other direction. Tell me what you meant by that, Matt.
Yeah, I think this is the biggest story in crypto. When crypto was tiny, when there were only a few people working on it, only a little bit of venture capital activity, no institutional investors involved in it, I think regulators and particularly politicians on Capitol Hill could look at it almost as a nuisance and wish that it would go away. But crypto attracted 5% of all venture capital activity in the US last year. Crypto is one of the fastest growing areas of the market in terms of employment. It's bringing sort of intellectual capital from abroad into the US markets to help build this industry. And you're seeing that reflected in statements from Washington, both on the regulatory and legislative side. If you look at like the Biden executive order, it talked about the need to introduce important investor protections in crypto, but it also talked about the need to facilitate the growth of crypto as a US industry. And that makes all of the difference. The biggest threat to crypto historically has been that regulators would strangle it because the technology just works. It's more efficient, it's faster, it allows us to do new things. The biggest risk was regulators wouldn't allow that to happen. Now that they see it as an engine of economic growth, now they see it as an area where it matters to voters, you're going to see much more even-handed regulation. And to me, it's hard to imagine the positive impact of that. I really think it sort of guarantees crypto's future and should be a catalyst for another major bull market. It's been a remarkable change.
Okay, great. Thank you for that perspective. Victoria, do we have any questions from the audience?
Hi, Kathy. As of now, we actually do not.
Okay, so Matt, I'm going to ask you my last question.
Great.
Matt, since this show is called Crypto Defined, my last question for you is, what do you think defines the crypto industry? And it can be at this moment in time, it can be over the past 5 years, is however you think about it. Again, what do you think defines the crypto industry?
What defines the crypto industry? Experimentation and potential is what I would say. When I look at what's going on in crypto, I see an incredible group of entrepreneurs and engineers figuring out what to do with these new capabilities that we've discovered in crypto. Right? Crypto allows you to do three really big things. It allows you to move money at the speed of the internet. It allows you to program money like software. It allows you to have digital property rights. Those are capabilities that didn't exist pre-crypto, and they're major technological primitives. They have the potential to reshape monetary systems, the financial industry, the creator economy, probably the most disruptive technological primitives I've seen in my career. And I've lived through the internet boom and the biotech boom and CRISPR, et cetera. But these are a really big landscape. And so that's the potential piece. And then you're just seeing so much experimentation with what to do with that. And that experimentation is not slowing down. Again, I'd point out again, $33 billion in venture capital in crypto last year, another $10+ billion in Q1. All of that is fuel that will allow these creative people to figure out what we can do with these new technological primitives. And I think we've barely scratched the surface yet. So potential and experimentation. And I'm really excited about what happens next.
Okay, well, listen, Matt, it was a pleasure talking to you. So many interesting topics. We could have gone on and on. And I would love to have you back on the show after the July deadline has passed.
Let's do it.
Whether the SEC approves this or not. But thank you so much for your time. I learned a lot, and I hope everyone learned a lot. We're going to do 1 minute look forward to the week ahead in crypto. So feel free to stay, but we are going to, I think Victoria is going to just put you in the audience. Thank you again, Matt, for your time today.
Thank you so much. Thanks for having me. I appreciate it.
Thank you. Okay, so what's up ahead in crypto next week? Here are 3 things to look out for. More details are expected to emerge next week about the lawsuit filed against crypto exchange Gemini by the CFTC. As Matt and I talked about, the CFTC says that Gemini's employees misled the agency's staff about how easy it is to manipulate the price of a Bitcoin futures contract. And that could have implications going forward for the Bitcoin spot ETF. Gemini's aim in talking to the agency was to convince the agency to allow a Bitcoin futures contract to begin trading. Also, continuing fallout from the collapse of Terra USD and its sister coin Luna that wiped out $500 billion in market value. Terraform Labs and founder Do Kwon have distributed a new coin, Luna 2.0, to those who lost money in the collapse. But some holders are saying on Twitter that they received a few dollars for the hundreds of thousands that they lost. Terra tweeted this week that it is actively working on a fix, and we expect details of this fix in the next week. Finally, the industry is watching the crypto markets carefully to see whether crypto chill will become a crypto winter. Cryptocurrency prices have plunged this year, and exchanges are hurting as well. You've seen Gemini's leaders, Cameron and Tyler Winklevoss. They just said in a blog post this morning that the industry is settling into a crypto winter, and the exchange plans to lay off 10% of its staff. Coinbase, meanwhile, recently reported that first quarter revenue declined 27% from a year ago. So we'll see more pain over the coming next few weeks, and we'll see that playing out in the next week, and we'll keep you updated. That's the latest for this edition of Crypto Defined for June 2nd, 2022. Please visit TruthDAO.xyz for more stories and to join our Discord and Telegram communities. We'll be posting a recap of our interview with Matt on Friday. Tune in next week when we talk to Will Pembo, who's the founder of CoasterPunks.com, about how he combines his love for roller coasters and aviation with NFTs. See you next week. Thank you again.